This week, the value of the naira relative to the dollar at the parallel market reached an all-time high. The central bank also postponed its monetary policy meeting. Our focus tonight is on Nigeria's volatile exchange rate and its impact on businesses and, of course, citizens. Babajide Ogunso, founder of Leadership by Data and Channels Television's data analyst, is here to share insights. Babajide, great to have you again on the news.
Good evening.
All right. So, let's get into it. There have been various perspectives, Babajide, on the reasons why the exchange rate has been volatile in recent weeks. Tell us, what indeed are the facts?
Now, there are lots of things why the exchange rate has been volatile, Ayotunde. But what we've seen is there seems to be a focus on just one of the reasons, and which is that we still largely depend on crude oil. However, what has shown, and if we follow the data, what we've seen is that there are lots of reasons. It's like a car. If the car doesn't move well, it's not just because the driver doesn't know how to drive. Sometimes it's you need to change the tires, sometimes you need wheel balancing and alignment, sometimes it's even the quality of the road. But what we've seen, Ayotunde, is that if we look at our history, history is repeating itself. In other words, Ayotunde, we shouldn't be surprised that we found ourselves here. I'd like us to take a look at this critical history, looking at the situation even as far back as half a century ago. Because if we take a look at the exchange rates, it will allow us to see the uncertainties that have been happening. Remember in 1970, with 71 kobo, you could get $1. In 1980, with 54 kobo, you could get 1 naira. In 1990, you then required 8 naira 70 kobo. The interesting thing is, when we started democracy, the return to democracy in 1999, going into 2000, the exchange rates, again, this is still less than 3 decades ago, 106 naira as at 2000. But what we've seen is consistently, just as history has been happening, the trend shows where we are because we have refused to understand that over time, the value of the naira has been depreciating. In simple terms, when we talk about inflation, inflation does not only mean that the price and the cost of goods and services are going up. Inflation also means that the value of your currency is declining. And so over the years, we focused on inflation from just the perspective of the price of things are going up without understanding that what has happened is the naira has been losing value year on year. In simple terms, I bought this for you.
The new 1,000 naira.
The new 1,000 naira note. But the fact shows, based on the way inflation is going, this 1,000 naira note within 2 years, like magic, will become
the old 500 naira note.
In simple terms, because of inflation, the 1,000 naira note is losing value like all other currencies. 25.9% inflation rate means that every day, not just every year, every day, the naira is getting weaker. In simple terms, if we continue at this rate, 1,000 naira as at today will be equivalent of 500 naira in 2 years. And so because of these reasons, a lot of people do not see the naira as a store of value anymore. And so the alternative is to look at a currency that they believe holds value, and that is the dollars. And don't forget, Nigeria does not print dollars. And so we are limited to the supply of dollars, even though many more families and businesses will seek to hold the dollar now rather than hold the naira.
So now, of course, President Bola Tinubu has spoken at several summits, speaking on the opportunities abound in investing in Nigeria, investment opportunities and financial returns in Nigeria. But do you think this will go a long way to help stabilize the naira as against the dollar?
The first is, what the president has done is what every right-thinking president will do: to speak to investors about the opportunities and the potential for financial gain in Nigeria. The challenge, Ayotunde, is that beyond what the president says, beyond the opportunities and the returns the president is promising, what a lot of investors are seeing when they look at Nigeria are the risks. And the data also talks about this. I'd like us to look at foreign direct investment, even from the perspective of the National Bureau of Statistics and the Central Bank, who have released the data, this year's data on how much investment is coming into Nigeria. And if we take a look at that right number, we see that shocking number, $48 million only. And why do I say only? This is the lowest foreign direct investment that has come into Nigeria since we've started recording foreign direct investments within this decade. $48 million, first quarter 2023. Again, this wasn't just because of the elections. If we look at the first quarter 2019, we saw better results. Again, first quarter 2019, $247 million came in, even though it was an election year. And if we still go back into 2015, even though first quarter 2015 was an election year, $395 million. So if we look at our history, first quarter 2023 is, for a lot of investors, shows doom. Again, because looking at our history, this has been the lowest foreign direct investment quarter in this decade. And that is the challenge. The president is doing the right thing by speaking about opportunities and the returns, but investors are seeing risk. And they are seeing risk because they look at how easy will it be for them to convert their investments into dollars and repatriate it. And so, yes, the Ministry of Finance, the Central Bank is talking about these challenges. A lot of investors have their funds stuck and they haven't been able to repatriate dividends, and they see that there are real challenges that the country has to face.
So what is the situation concerning the country's dollar reserves at the CBN? What can you say about that presently?
Presently, before we talk about the president, we need to talk about the history. Ayotunde, at some point in 2008, this time, September 2008, Nigeria's external reserves, $68 billion. You heard me right, $68 billion this time, 2008. Now, let's take a look at the position in September 2023. And when we take a look at that, here's the shocking thing. We're not at $68 billion, we're not at $40 billion, neither are we at $45 billion or 50. $33 billion. Again, keep that number in mind, $68 billion in 2008. We are nowhere near where we were in 2008. What about 2019? 4 years ago, $41 billion. Again, we are no longer even close to where we were in 2019. Where are we today? We are back to 2011, 2015 period, $30, $31, $32 billion. In simple terms, investors take a look at these numbers and what they see beyond the opportunities in Nigeria, they see the risks. Can the central bank protect the naira? Some even argue, Ayo, that these external reserves are gross and the picture might not even be complete. That if you adjust these external reserves for a lot of unknowns, the situation as of September 2023 might even be more there.
So, Babajide, what is the real value of the naira as we speak?
If you ask me, Ayotunde, the real value of the naira is tough. But what we know is why are investors and why is everybody dumping the naira? And I'd like you to carefully listen to me. Inflation rate, 25.8% based on the report we have. In other words, you want returns that are higher than that. But let's take a look at the core money market indicators in Nigeria that will allow us to understand why people feel that the naira may be fast becoming tissue paper. Savings rate, you take your money to the bank, you get 5%. However, inflation, 25%. In other words, you lose money by taking your money to the bank. You want to fix your money for a year, you get less than 8%. Inflation, 25%. Ayotunde, you lose money if you fix. The government offers treasury bills, an alternative investment. However, if you buy that, you get just about 9%. Inflation, 25%, so you lose money. What about the long-term bond yields? If you buy that, the government gives you, or you get as a return, 13%. Again, inflation, 25%. So traditional investment options still make you lose money on the naira. And so what are people turning to? If you don't get returns on your savings or your fixed deposit or treasury bills or government bonds, one thing that has shown for a lot of people, businesses and citizens, that will protect their naira is if they convert their naira to dollars. But don't forget how we started. The federal government and the central bank does not print dollars. And so everybody's rushing to the dollars, everybody's rushing out of the naira and into the dollars. And so the value of the dollar keeps rising. Again, don't forget, I don't know how much this will buy you today, but you surely could keep it. But never forget, because of the way things are going, 1,000 naira will soon become 500 naira. But again, let's not lose hope. We're saying that the central bank will reconvene soon. We see a new governor at the central bank who seems to understand, based on his experience, how to handle such crisis. So what we expect is, in the days ahead, we'll see a new leadership of the central bank that will improve potentially the value of the currency and take the Nigerian naira to where it really belongs to, and that's the top. Don't forget, our history, we've seen the naira at some point in time stronger than the dollar. We've seen it move to 102 naira. But even if the naira is going to lose value, there are some inherent benefits, export benefits that we could get from a weaker naira that we also need to explore. So the vision and the mission of Yemi Cardoso has to be very razor sharp.
Indeed, the new CBN governor has his work cut out for him, and let's hope that we'll get back to those glory days where the naira has.
We surely will. We have the potential to, Ayotunde.
Papa Chidoguso, thank you so much for your thoughts again on the News at 10.
The pleasure is all mine.